Okay, welcome back to this session, the continuation of our class. If you remember, we talked about three, said this strategy I trade is based on four concepts, right? I said it's based on market structure, liquidity, point of interest, and then directional bias. We talked about all of those three concepts. Now what we're talking about is the last part, which is the directional bias. Because directional bias is very important, that's why I break down the class into four different categories. I talked about directional bias in four different categories. We talked about two. This one is the top one. And then in this class, we're going to talk about multi-time frame analysis. Because what I taught you, yeah, to identify a market structure, to identify bias, you want to see higher highs, higher lows, higher highs, higher lows, higher highs. This is what you can see in higher time frame. Or I say this is what I teach you, but this is not what you see when you go into the market. You see something very different. This is not only what I thought you. So because of that, there's a way, because this is just an illustration to identify higher time frame bias, right? But this is not what you see when you go into the market. You want to see this, you will see something different, something like this. Market giving you something like this. This is here what you might be encountering, something like this, which is not what I told you guys. Like this is something very different. So how can you be able to read something like that? That's why we talked about multi-time frame analysis. Multi-time frame analysis is very important. It's you combining an internal and external structure. I gave you example of how to read bias, or how to read structure, or how to use um, higher time frame to identify trend, off trend or downtrend. These are your external structure. You have to know that. This is an external structure. I'm talking about the external structure. We don't use external structure for our entries. We don't use external structure for our entries. So if you look at this one now, this is a BTC USD daily time frame. Your external structure is this. Your high time frame structure is this. You see, you have a breakup structure to the downside. That's your external structure. What has been happening, or what has happened inside this zone, from this range, from this low to this high, is your internal structure. And then your internal structure will be your lower time frame structure. For example, if we have a daily structure like this we use that to determine our bias, right? So, but we don't only know that this is daily is bullish, but we're not trading daily. We want to trade lower time frame. We want to execute trade. So we have to use lower time frame for our entries. That means we have to use per hour time frame. So if we scale down to per hour time frame, we will not see something like that. We'll see something like this. Market giving us a series of lower low, lower highs, lower low, lower highs, lower low, lower highs, lower low, then change of character, liquidity, and then we look something like that. This is what we see internally. We're not only seeing this high and low, this high and low. So we see something like this. So to know how to identify higher time frame, you must know how to read lower time frame. That's why a multi-time frame analysis come from. Before you know that, okay, this is currently bullish, or we're not in a corrective phase like this one. We're not in this corrective phase. We what in a what in a falsy pace. Before you can even say that, you must read a higher time frame, lower time frame structure. So to identify our corrective move. So to identify our corrective move or impulsive move, we must read internal structure, internal market structure, not external. This is our external market structure. This high, and then this new low. This is our external market structure shape, market structure. Right here again. This is our external, this low, and then this high, and then this low, giving us what? A lower low, a lower high, a lower low, a lower high, right? So this is how we read. This is what I told you guys. This is how I taught you market structure. But it's much more than that. It's not just like that. It's not just this. But this is what I taught you. Because I said this is how you can read structure. I'm talking about external structure. You see how external structure you can read? Very easy. A higher high, a lower low, lower high, lower low, lower high, and then lower low. Now you expect a what? A lower high. The market give you another what? Lower low. This is your external structure. You see, this is a beginner-friendly market structure. But in today's class, we're going to talk about multi-time frame analysis, how you can use internal structure and external structure, and what is the rules when using what? Internal structure and then external structure. I'm going to unmute you guys. Unmute yourself. Can you hear me, guys? Unmute yourself. Do you guys understand?
Yeah. Correctly.
Okay, so we're going to, let's get into it. Um, internal structure. Internal structure, before market shifted structure in the higher time frame, if market is bullish, giving us what? A series of higher highs, higher lows, higher highs, higher lows. There are zones that we expect price to fall into because we understand how price move, right? Price has to make a what? An impulsive move. And that impulsive move, what? The purpose of that impulsive move is what? To break a key level, which is what? This high. So anytime we see an impulsive move, we see a move that breaks structure to the upside, we can know that we can say, like confidently, you can say, okay, this is a impulsive move because impulsive move is meant to drive the market in the current direction it wants to go. So for markets to maintain this bullish structure, it must what? Break this high. Give us a what? A break of structure, BOS. Yeah. So this is how we can determine, this is how we can confirm that, okay, this is an impulsive move. This move that drive these markets to break this high, to break this key level, to give us this new break of structure is called the impulsive move, right? And then the move that market used to make to correct this imbalance, to fill this imbalance, we know that it's a what? It's a corrective move. It's what? Corrective move. And there are zones, corrective move. So since we know how to identify impulsive move and correction move and what is the purpose of each of these moves, then we can talk about where do we expect correction move to come from and where do we expect impulsive move to come from, and when can we say, and like when can we like 100% sure that okay, we're about to shift this move from what? From correction move to this impulsive move. Like for now, when market correct this move from here, it correct to this zone, this breakup block. Okay, we know that, okay, this, how do we know this is the end of this corrective move? And we're now in a what? Another way to what? To make an impulsive move. So before we make that impulsive move, we know that this is the target, right? Is what? Markets to what? To take out this new high. Anytime we what? We have this impulsive move. So how do we know we're in what? In a phase that this corrective move has come to an end. Now we're trying to what? To have another new move, which is what? Impulsive move. So you see, now we know the target of this impulsive move and this correction move, right? Where do we expect those to happen? That's one. And then how do we determine, how do we know that it's happening? So knowing where to expect it to happen is very easy, right? Because it must happen from a what? Higher time frame POIs, either breaker block or what? An order block. But how can we even know that it's happening in any of those? So you see, we must read internal structure. We want to go inside the structure to read the structure very well, to like in a way that we can understand that okay, this internet structure has shifted from bearish to bullish. Okay, since it shifted from bearish to bullish, that means our is what is now correlating with our what? Our higher time frame bias. So if we have this corrective move, that's if we have this correction move coming, if we have this correction move, market will be giving us something like this. I'm going to try to explain this so that I will show you in the chart. And market will be giving us from here, from this zone. Let me mark it from this zone, from this high. This is what market will be giving us in lower time frame, giving us what? Lower low, lower highs, lower lows, lower highs, lower lows, lower highs. So now this is our internet structure. If we're dealing with daily time frame as our bias, so we want to see internet structure in the 4-hour time frame. Before we expect another impulsive move to come, this move that will break what? This high, we want to see shift in that our internet structure. We want to see internet structure shifted bullish because of what? Because it definitely bearish. Before higher time frame turns to bearish, internet structure must turn to bearish first. For example, if we have market is giving us what? A series of higher highs, higher lows, higher highs, and then higher lows, higher highs. Now, before we expect a corrective move to happen, we must wait for lower time frame, because you see this is higher time frame is bullish because of what? It's giving us what? A series of what? Break of structure to the upsides, right? So before we even consider the corrective move to come from, we want to see that internet structure shifted, because if you go to the internet structure, we will see something like this: higher highs, higher lows, higher highs, higher lows, higher highs, and then higher lows, higher highs. So before we expect a corrective move to come from, we want to see this lower time frame structure shifted. Before we say, okay, this is a corrective move, we correct the move, and then we continue going to the what? Higher time frame structure, which is bullish. So how do we even do that? How do we even clarify that? That's why we have to use different time frame. That's what is called a multi-time frame analysis. For example, let me give you something. We've been talking about BTC and gold. Let's try currency fears. Okay, let's try AUD or Euro AUD USD. It's a currency fear. So let's try AUD USD. Let me try to show you what I meant in the chart. Yeah. So this is daily time frame. AUD USD is a currency fear. So Australian dollar, US dollar, right? So if you look at this one from the higher time frame, because I use daily as my bias or 4-hour, depend on what market is presenting at the moment, right? We're going to have a question and answer class where you can ask every question, so that we have a class that's specifically for answering questions. But I want to teach you these things so that you will get your question coming in, right? So if you look at this time frame, you know that clearly my price is bullish. I said to determine price is bullish or bearish, you look at what? At the recent break of structure, recent one. You look at 2 consecutive to confirm that it's a bullish, right? That means for us to confirm this market is bullish, we want to see the recent break of structure, higher highs, higher lows, a recent one. That's how we can determine this is a what? Is bullish. So if you look at this one, how can we determine that? So we have a high, because this is a easy time frame you can read structure, and then a low. That's one. And then we have this high, and then we have this low. That's also enough for us. But we have another what? High. So I'm trying to give you an example on this current price action, so that I don't want to go to monthly, like last month or 2 months, to give you an example. So I will be using the current time frame. I will be using the current price action to give you this example. So what can we identify? We can identify that this fear is currently bullish, giving us what? A series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, right? So we know that daily now, daily time frame, our bias is what? Bullish. But that does not mean we're looking for buys everywhere, right? We will not be looking for buys everywhere. Why? Because we know that for any time we have what? Impulsive move, correction move is coming. And then before we have another impulsive move, right? So if we can identify this, we have a break of structure to the upside right here. So let's mark it BOS. Right? So what do? If we have this breakup structure, we identify our low. This is our low. Why is it our low? Because it's the low that leads to this what? To the breakup structure to the upside. I talked to you about swing high and swing low. Any high low that breaks a structure to the upside, right, is called a protected low. Why is it a protected? It must I don't want to be rushing things, but if you have a high that broke structure to the upside, this low did its job. What is the job of this swing low? Is what? To break structure to the upside. So it broke this structure to the upside. That means that low is a strong low. This low is a strong low. The same thing in a bearish market. When you have a what? When market is bearish, this high, the purpose of this high is to what? To break up what? To break this low. To create a what? New low, which is your what? Lower low. So if this high now, higher low, break structure to the downside, that means this higher low now is become what? A strong low. What do I mean by strong low? It's the low that's going to determine the fate of this current trend. So if it's bearish now, market broke this low in a high time frame, market broke this low, this recent low now, this your lower low. Price broke this lower low. So anytime price do something like this in the higher time frame, your bias time frame broke this low, this your what? Strong low. That means you have a shift in higher time frame. You have a change of character or market structure shift in higher time frame. But this is not the same in lower time frame. Because in lower time frame, you must have all of those confluence that we use when it comes to what? To picking our point of interest, liquidity, inducement, and then our point of interest, and then our market structure. So I'm going to repeat this again. If you have a bias time frame, daily time frame, a high and a low, and a high, we identify this low as a what? As a strong swing low because of what? It did its job. What is the job of strong swing low? Is what? To break structure to the upside, right? So anytime price tends to come back to give us a correction move, instead of that correction move, price failed to break the high, and instead it broke the low. We have a structure shift in the higher time frame. That's one. That's our strong swing low. And then again, if we have a strong swing low but that fails to break a high, if we have this low, it fails to break a high now, it do something like this. We know that the target of this low, the purpose of this low is what? Is to take out this high. Is to take out this high, right? The purpose of this low is to take out this high. If it could not, it automatically become an inducement. Any high, any low that failed to take out a high, it automatically become an inducement. So until price do something like this, break this high, this low become an inducement. That means it could become liquidity. It's a weak low. This low supposed to break a structure to the upside. If it do that, this low becomes strong. But if it could not break structure and price come back from there, it will use that low as a liquidity and then continue pushing up. Do you guys understand? Let me ask you to unmute yourself. Do you guys understand what I meant?
Yes, we understand. Let's continue the example.
Okay, I'm going to give you example.
Let's continue the explanation using the chat, not the diagram.
I want you to understand. That's why I'm using the diagram. I'm gonna use the chat. That's why I even changed the fair. I always trade BTC and gold, but I change it to currency pairs because most of you guys use currency pairs, right? So I just want you to identify things. I said the first of all is to identify your breakup structure, your high and your low in your bias time frame. If you look at this one, this is where you have your breakup structure. Market broke this structure and closed above. That means this is your what? Recent breakup structure for your bias. So this low now become a what? a strong low. A price coming below this low shifted structure in the higher time frame. That's one. That's your external structure. This is how you can read your external structure, but we're not dealing with external structure. How do we know we're in impulsive move and we're in a correction move? Because if you see here, we have this impulsive move block structure and the market correct back to this zone, and now we're what? We're off again. So for us to maintain this current structure, we know that the overall target of this price is what? To take out this high to create a new higher high, to create a new higher high. And if you do that, that means this our new low now. This our new low becomes strong because it what? It did the job it meant to do, which is what breaks structure to the upsides. So that's our higher time frame structure. But how do we know we're in a corrective move and we're in a what? In a impulsive move? That's when we read the lower time frame. So let's go to lower time frame. Let's go to like 4-hour time frame to read the internet structure. So look at this. After market price broke this high, give us what? The internet structure, if you can read the internet structure, we have a higher highs, a higher low, higher highs, higher lows, higher highs, higher lows, and then higher high that broke this structure. Mine is clear, probably. That broke this low to the upsides. That broke this high, sorry, right? What did price do? It shifted structure in the 4-hour time frame. How do we read the internet structure? We look for market structure shifts. That's how we can determine if our 4-hour structure has been shifted or it has not, right? To identify that, that's how we can use what? Our recent breakup structure, which is what? This breakup structure, market broke this structure. This is not a valid breakup structure because it rejects back. Market sweep the high. Can you see? Market sweep the high and then come back. That means this low, we don't consider this as a low. This one, we don't consider it as a low because of what? Because of what? Sorry, it's our recent low. Because of what? Is the low that broke the structure, not this one. So any break below this one, that's when we determine our what? Our structure shift. This low is the low that leads to break of structure, not this one. Because this one sweep the low and market full back into the range and give us another break of structure. So that means this is our what? Structure shift. You see, from the lower time frame, we're ready to what? To shift that structure to the what? To do what? The job of that higher time frame what? Bias, which is what? After the break, which is our impulsive move, we tend to have correction move before we continue pushing up, right? So that means this low now, please guys, hold on, give me 30 seconds, 10 seconds. Okay, let's continue. Okay, let's continue. We said internet structure is how we can know that market is currently bullish because in lower time frame, in higher time frame, we can only identify our what? Our break of structure. We know that market broke structure to the what? To the upside. That means we confirm that in higher time frame, this is what I thought you guys, how you can read your higher time frame structure. But this is not how we can read it in lower time frame. You see, in lower time frame, your internet structure, which is your 4-hour structure, is your internet structure. If you're dealing with daily as your bias, right? So you see, in lower time frame, you have a higher high, higher low, a higher high, and then a higher low, a higher high, now a higher low, a higher high, but it's a failed higher high. Now, market pull back to give you this as your what? A new higher high. So to confirm that, okay, now you got a break of structure to the upside, that confirm your what? Your bias is bullish. Market broke structure to the downside. So how do you confirm that, okay, we're now in a phase of corrective move? It's within the lower time frame structure, which is your what? Internet structure, which is your 4-hour time frame structure. Then you look for market structure shift as your what? Reversal concept. Because you're now in a impulsive move. So for markets to turn bearish now, for markets to do a corrective move, you must wait for what? Reversal concept. If price is bullish, this is our impulsive move in lower time frame structure, which is our what? Internet structure. Right? For price to give us corrective move, we want to first see a what? A structural shift, then price what? Started correcting down. This is our what? Reversal patterns. So in anywhere after the break of structure, the first thing you're going to look for is what? Is your structure to form. After you clearly identify your high time frame break of structure, which is what? This high. Now the next thing is what? To go to the lower time frame, your internet structure, which is the 4-hour time frame, and observe the patterns. Do you have structural shift? Yes, we do. So since because we have structural shift, now market is about to make a corrective move. So you see, you'll be looking for sales now instead of to wait for market to do the corrective move for you to continue buying. So how can you do that? By looking for your what? Structures. What are that your structures? Your market structure shift. So market broke this low now to give you a market structure shift. And then as I explained, what is your inducement? You look for inducement, a pace pullback after break of structure. This is the pace pullback price this after you got the break of structure to the downside, right? And then you choose your what? Point of interest that is closest to your liquidity. That all of the your battle concept is so easy like that, guys. So if you look for your POIs, you have this order block as your POI, and then you have this breaker block as your POI. Look at this, guys. So you look for the one closest to your liquidity. This is the one closest to your liquidity, which is the breaker block. So you'll be looking to sales now instead to look for what? Buys. But you have to know that your high time frame is bullish. Now you're in a corrective move, right? So this is where you can take your sales. What are you going to be looking for? Now you'll be looking for more sales until your lower time frame structure has shifted to bullish again. Because if you look at this one, your higher highs, higher lows, higher highs is bullish. Then now you shifted to bearish, right? So you'll be looking for sales until this structure now shifted against to what? Bullish, because you'll be looking for a lower low, lower highs, lower lows. Then if this internet structure now shifted to bullish, that's when you can say, okay, so let me go to higher time frame, because my internet structure now has shifted to bullish, and then my higher time frame, which is daily time frame, is already bullish. Now what move are we going to do? We're going to do the impulsive move again. That's just it. Same thing when you finish the impulsive move, you see a structure shift. Okay, what do you expect now? Internet structure tell you what? Now it's time to what? To correct the move. So that means you're not fighting against the high time frame. You're going in line with the time frame. Do you guys understand? You're going in line with the high time frame. So let's continue. I said, what are you going to look for next? Is the same thing. Your break of structure to the downside. That means now because your internet structure has shifted bearish, you'll be looking for what? Break of structure. So market break this low now. So you look for your concept. After break of this structure, what do you look for next? Your liquidity. So market give you this liquidity as your first pullback. And then your point of interest. Again, market use this breaker block. Is the one closest to the liquidity and is what? Is unmitigated. You see, price use it again. What are you going to look for again next? You want to look another what? Break of structure. So if you can see clearly again, you have this internal break of structure. After price tapped into your POI, price broke this low. Pull up to give you this as your what? Liquidity. As your what? Inducement liquidity, right? But if you can see right here, you have 2 points of interest. You have the breaker block, this breaker block, and then you have this order block. These are your 2 points of interest. You will wait for markets to come to this POI before what? Because it's your last recent break of structure, right? So if you're looking for structure shifts, because this one is your last recent break of structure, after this one, if you can read clearly, you have a high, lower low, lower highs, lower low, lower highs. Now you have another lower low. If price will give you lower high, then I look for I will get lower low. So if this higher time frame structure, lower time frame structure has not shifted bullish, you will not be considering your higher time frame. Just because your daily is something like this, your daily is what? Is bullish. If your internet structure come back to this order block, now that you expect what market to tap into before you expect another correction move. If your internet structure has not shifted bullish, that means has not taken out this your last high, which is your lower high, you will still bearish. Don't consider your high time frame because internet structure has to shifted bullish first before your higher time frame shifted bullish. So that means if price did not break this high, let's say you come this tap into this one and give you another structure shift. That means you have a structure shift in the daily time frame. Now again, that means your internet structure already is bearish, and now your daily time frame has shifted bearish. I hope you guys understand it. So let's continue. So if we look closely, price has come and tapped into that your what? Your unmitigated zone, because this breaker block has been mitigated with this your order block, with this your what? With this your inducement liquidity. So what are you going to do now? You're going to do something like this, because you see that this is your last lower high. This high now is your last lower high. If price broke this high now and close above, that means you shifted what? Bullish in lower time frame. You shifted bullish in your internet structure. That means what? Now it's time for what? Your impulsive move. So if impulsive move is coming, what do you do, guys? You marked your higher time frame. You go back to your daily time frame. Okay, what do I have in daily time frame? I will mark this high. I'll mark this high because I know is what is going to be the target now. I'll be looking for buys until market take out this high, right? If my price hasn't do that, if price now did not close above this one and give you another structural shift in the 4-hour time frame, how do you read your structural shift in 4-hour time frame? That's why I said market structure is very important. That's why I took two classes just to explain market structure to you guys. You read your structure. What is your structure? Your higher highs, higher lows, higher highs, higher lows, right? Equal highs, equal lows. Then you have a higher high now, another higher low. You have higher highs, higher low, higher highs, higher low. Now higher high, right? And that higher high tapped into your daily what? Order block, your 4-hour structure order block. What are you going to look for now? Because you know that your 4-hour already is bearish because of what price has been doing. You see lower low, lower high, lower low, lower high. You expect price to tap into this zone and give you another lower low now, right? So what are you going to look for now? It's simple. You're going to look for what? Your structural shift. Why do you expect structural shift to happen? After this break of structure, because this is a valid break of structure, right? Because what? It closes with what? Complete body. So what is your low now? This is your strong low. If price close below this one, you have a market structure shift in what? In 4-hour time frame. That means you're continuing with your 4-hour structure. So if price close below this one, give you liquidity. Sorry, guys. Closes below this one, give you liquidity, and then you look forward for continuation of your sales. And you will be selling and selling until that your internet structure shifted bullish again. If it has not, and then price take out this low. It take out this low. What is this low? Then you go to your high time frame, your daily time frame. Okay, this low is my strong low because it broke structure to the upside. So if price break this low now, I turn bearish. So you see, your internet structure is still bearish, but your excellent structure is bullish. So you don't have to consider this internet excellent structure until price turn bullish in your internet structures. That's when you will be looking for okay, now we're in a impulsive move. If you don't have close above this high, if you don't have close above this high, you'll not be looking for any buys. You continue selling down because this is the internet structure you're dealing with. So internet structure must turn to bullish before you look for internet structure in higher time frame. Do you guys understand? The session has already come to an end. Let me unmute you guys so that should not. You guys unmute yourself. Do you guys understand? Unmute yourself, guys. Do you understand?
Yes, yes, yes.
Do you clearly
You
understand?
clearly understand. But if I could remember, it's the other class, last class we had, you see that Saturday they're going to have 2 section class. I don't know if they are still on it.
No, already because I did not get time to have the class in the evening, so that's why we're gonna only have one. So tomorrow, if you guys have time, we can fix question and answer class so that I can answer all of your questions. Do you guys understand?
Okay, okay. I think, yeah, from my own point of view, I think the question and answer class should be our second to the last class.
Next class is going to be the last one. But before that, I want to answer the questions based on all of the things I taught you guys. This margin structure, liquidity,